Welcome back, everyone. Today, I'm going to give you three main things that I'm doing to hedge the risk in this crazy market. Let's get started. Welcome back, everyone. Another episode. Won't be a long one today, but every so often I come up with these videos for you to show you how I'm maneuvering my portfolio to, one, protect my capital, and two, capture the most amount of upside with the least amount of risk. And so every day I wake up, and I just had this conversation this morning. I wake up every day and I see a new article in the Wall Street Journal that is so earth-shattering that I have to think about all the halo effects that it has across a variety of markets. And of course, today, Tesla buying 1.5 billion of Bitcoin, and just a number of capital flows across the market. You have Cathie Wood, who I think is fantastic from ARK Invest, maneuvering quite a bit. We have real risk to the long-term viability of commercial, that being hotels, that being restaurants. There was an article in the Wall Street Journal that talked about this COVID thing is here to stay. It's not going to go away in 6 months through the vaccine, because this is a different kind of variant. It mutates, it's getting stronger, whereas most viruses, they get weaker over time. And this is evident by the strain in South Africa. The vaccines are still effective, but less so, while the death rates are remaining constant, if not increasing. And so the net of that article was to say, look, COVID's going to be here for years, if not decades, right? So life's going to shape around the COVID. And when I saw that article, the idea of commercial rebounding in a robust manner is just probably not going to happen. And so a lot of headwinds for the hotel and the commercial industry, office space, plus the minimum wage, which is very likely. It's not a matter of if, it's a matter of when and what amount that's going to have or be. And so again, you think about the restaurants and the hotels, they'll be greatly affected by that. And then, of course, there will be upside in other areas of the economy. So it's not all downside for the minimum wage. But again, a lot of big things are changing, right? We expect a tax policy change probably in 2022, 2023. So there's that, the new stimulus. There's just so much happening. The real estate inventory, supply and demand still is way out of whack. I am seeing prices across not just real estate, but if you go to your city, I bet you're seeing alcohol prices go up, food prices go up. There is real price inflation happening across the board, right? So what I want to help you understand today is, okay, what in all this chaos can I do to make sure that I don't lose money and that I can continue to make solid returns? And I think the first thing we have to do is level set on what is a solid return. When I think about returns, knowing that the historical return of the market is around 10%, 10 to 12%, give or take, with fairly volatile returns in between all that. For me, I'm very satisfied with something between 18 to 25% return on my money, with as much or as little downside as possible. So, Ray Dalio also came out with this idea that, look, I mean, you can't have all your money in the stock market or bonds, and you can't have all your money coming in from one W-2, right? It's just too risky, right? So the returns are one piece of it, but the risk control is another piece of it. And so what I've been doing, if you follow me, you know I'm a big fan of Ray Dalio as well. I love his all-weather portfolio, but this market is just simply not built for that portfolio. So I've had to reshape my stock portfolio to capture some of the upside that we're seeing in Apple, Alibaba, and Amazon, right? Those three are going to be big hitters in the future. And I think you have to put some of your capital into those stocks, even though they're at a high price point relative to the average. I think you still have to be buying some Alibaba. You still have to be buying Amazon. And one thing I do want to share, if you look at Amazon, they're taking on some of the ideas that Alibaba's been doing. One of the key ones you'll see at the homepage of Amazon, you'll see now this live stream selling. That wasn't created by Amazon. It was created in China, where they've been using these platforms to essentially do like this pseudo QVC sort of selling. And it's doing really well in China. And so you're now seeing Amazon take on that idea. And again, Amazon's set up very nicely. If you're curious about, the future of these new technology companies, Cathie Wood, again, love her. She has a great bit on the idea of the S curve of innovation. And right around 15% of market share companies tend to really pick up the speed of their sales growth and capture the market. Well, Amazon's today only around 15% of the e-commerce market. And so I think their future is right at that point of critical mass where we really are going to see them exponentially climb up the scale. Alibaba, I think once Jack Ma gets through all the political stuff, it's going to be, a gang-busting company. And not just from the product standpoint, but they're taking over the banking system, right? So it's a very dynamic company. I see a lot of upside there. But also beyond the stock market, I want you to really consider cash flow. Okay, this has been such a market around speculation stocks and big home run deals. Think about cash flow. Private money deals right now are earning 15 to 20% consistently with very little headwinds ahead, right? So low risk, you're still earning a really good return on your money, and it provides cash flow. Okay. So do consider private money as a alternative way to invest. And again, if you want to learn more about that, you can simply email me and I can answer what that all means. We have plenty of deals for everyone out there. And then also real estate. It shouldn't be a surprise. Real estate I just had an interview with Marco Santarelli. I'll put it up here above. He's a bigwig in terms of the real estate world. And we both see a very bullish market for real estate for at least 5 to 10 years. The demand is so far ahead of the supply, and developers are simply not producing enough supply. I myself am a developer. I'm working on developing a 60-unit master community out in Arizona. And one of the things I always look for is, well, I don't want to develop this with the plans to sell over a 3-year period if the supply is going to completely wash away my profits, right? Supply and demand, as supply increases, your margins, contract. And so what I'm watching very closely is, do I have enough runway with what I'm building for the market to not affect supply substantially where I lose money? And I'm having a hard time seeing the risk because there's so little risk in the demand curve of real estate. And so if you're buying real estate, you're in a really good situation with appreciation, with cash flow if you buy right, and ultimately with your tenant paying down your mortgage. So long term, again, real estate's a fantastic vehicle to play. So private money is one thing I'm doing big time. Real estate for sure, continually buying properties, and then buying stocks that have foundational companies that have strong balance sheets, strong cash flow, Apple, Alibaba, Amazon, and then I am following very closely Cathie Woods. Now, I have a variety of other stocks that I've picked in my last few videos, so you can take a look there if you want to see those, Bank of America being one of them. But again, do not simply invest your money, at least my recommendation is, do not simply invest your money in just stocks, and do not just simply rely on your W-2 for your income. So diversify across a number of asset classes, produce cash flow, produce returns, and collectively your portfolio will be much stronger. So I just want to give you all a quick 10-minute video on how you can simply hedge against this market. And please, please, please do not follow the herd. The GameStop, I told all my friends that were thinking about investing in GameStop, I said, look, this is a classic situation where you're chasing the herd. You're going to get hurt if you do. And I think a lot of people did lose money and a lot of people did make money. But this market is a speculative market. And so be sure to invest wisely. If you don't know what you're buying, don't buy it. If you like what you heard, give it a thumbs up and do me a favor and subscribe, and we'll see you soon. Thanks.